Welcome to Ukraine Today. We are joined by Mr. Timothy Ash, the head for Central and Eastern Europe of an international financial holding company, Nomura. Mr. Ash, thank you for joining us. So, Ukraine recently saved themselves quite a lot of money, some 20% in a debt restructuring deal. How necessary was this saving for the Ukrainian economy?
Well, I mean, clearly it was part of the agreement with the IMF in terms of securing $40 billion of total financing for Ukraine, 25 billion from official creditors, 15 billion of financing contributions from the private sector. And more or less that was agreed, or has been agreed with the major private creditors as part of this restructuring agreement. That has also got to be agreed by the wider investment community. So hopefully we're going to see that in the next couple of months. So from a financing perspective, it has made a significant contribution. Less clear-cut, I guess, is issues about debt sustainability. Was it adequately addressed in this deal? That probably only time will tell in that respect.
So, Mr. Ash, can you tell us what conditions has Ukraine had to agree to receive this financial aid?
Well, the 25 billion is clearly linked. It's both IMF money and other official creditor money, World Bank, etc. And that's clearly linked to implementation of the IMF program. So it's a macro stabilization program, fiscal adjustment, banking sector reform, structural reform program. And, Ukraine's making very good progress there. The private sector restructuring contribution, I guess there are no specific requirements or stipulations set by the private creditors. They also, I guess, have an interest in Ukraine keeping on track with the IMF program, because if that ensures macro stability, growth, development, then ultimately creditors will get paid back as well.
So Ukraine recently came close to defaulting on an IMF loan. How was that avoided?
Well, not an IMF loan. They are in the process they will probably go into a technical default as part of this restructuring, but it's probably going to be very short-lived. Well, that's the hope anyway, and with agreement of creditors, with the private sector creditors, they will come out of this technical default relatively quickly, and that will, in the end, hopefully reassure everyone that Ukraine is sustainable. There is obviously issues around $3 billion of debt owed to the Russians that falls due in December. Question mark whether the Russians participate in this particular deal. If the Russians don't, it gets quite complicated, because then Ukraine, in theory, could be in arrears to an official creditor, and it creates lots of complications for the IMF. The IMF may well then have to make a decision about whether it will continue to lend into official arrears, so it may have to change policy. So it's quite complicated, but I guess the first stage of kind of normalizing Ukraine's relationship with international creditors is this debt restructuring deal that's currently on the table. Hopefully will be signed off by the private creditor community in October, and let's see what happens with the Russian $3 billion in December.
So, Mr. Ash, what impact would a technical default have on Ukraine?
Well, a technical default, if it's a temporary, transitory kind of thing, will be quite limited. I guess when a country has already been subject to an annexation of a significant part of its territory, there's been a conflict, obviously a very significant conflict in the east of the country. You've seen a huge devaluation of the currency already. You've seen, a lot of restructuring anyway of private sector liabilities, and the banking system has been massively stressed and distressed, and is in the process of being restructured. How much impact a default would have in any event is a question mark. It's been through so much. There's a debate about, in any event, how much a full-blown default would have actually had. But in any event, it looks like it's going to be a technical short-term default with relatively limited downside.
So, Mr. Ash, the Ukrainian economy are pushing ahead with privatization. What impact do you see this having on the Ukrainian economy?
Well, the international experience is privatization can bring positives in terms of it can generate important revenues with the sale of state assets, one-off revenues. They can help pay down debt. They can help cover budget financing shortfalls. I mean, the consensus seems to be that the private sector is better at running certain assets than the public sector. You know, obviously there's a huge debate about that, and you know, many people would perhaps debate that even in developed market economies like the UK. But you know, I guess the experience of emerging Europe and former transition economies is the public sector is not very good at running many of these assets, so hopefully the private sector will be better.
In your opinion, Mr. Ash, how much is Ukraine in need of foreign direct investment?
Well, I mean, this is probably going to be the key to determining whether Ukraine, you know, grows at 3% or 5 to 6%. I mean, if the policymakers, the current government and administration, if they're successful in doing the really difficult things, which is actually improving the business environment, fighting corruption, red tape, improving the judiciary, if all those kind of things, if they're successful with all those kind of things, and they make the business environment attractive to foreign direct investors, I think Ukraine could do really well. I mean, it's a big economy. It's got a very large, skilled population. Wage costs are very low now compared to the rest of Western Europe. So it's a good place to produce for sale in Ukraine and to re-export. It's got very interesting sectors of the economy: IT, agro, food processing, chemicals, metallurgy. You know, these things are sectors that I think, you know, you could see significant inflows into. I mean, there's no reason why Ukraine shouldn't attract large inflows if they get the business environment correct, and that will help spur growth, development, help improve living standards, wages. You know, that's the key to Ukraine, you know, developing at a fast and rapid rate.
How important is peace for a growing economy? Look at Israel, for example.
Well, sure. I mean, there are good examples of countries that have managed to survive. I mean, even in a conflict situation. I mean, I think you know, countries can live with situations. They can get used to insecure situations. Another good example with Turkey, with a Kurdish problem that went for 40 years, and Turkey still developed. I mean, I think it's important that the extent of the conflict is moderated. You know, that people see that it's relatively limited and restricted in its location and in its extent. You know, if the concerns are that it's going to be extended, I think that doesn't create a very easy situation for foreign direct investors, for example, who are making a decision on whether they want to invest in Ukraine. Georgia is another example where we had the Georgia-Russian war in 2008, but the economy recovered quite quickly and rebounded, you know, at a very good pace. But important, the conflict was short and limited, and peace resumed quite quickly, and the economy continued. So I think, you know, in the end, it's much easier to develop if you have peace and security and you control your borders.
But a conflict, regardless of size, from the point of view of an outside investor looking in, is that a red flag? Yes,
I mean, no doubt about it. I mean, unfortunately, Ukraine is in the headlines internationally for the wrong reasons. When foreign direct investors, you know, there is a lot less foreign direct investment around at the moment. It's a much more challenging global environment. Foreign direct investors have a lot of choice where they invest. There's a lot of competition between countries for that foreign direct investment. So, you know, having a security and conflict situation, unfortunately, will turn a lot of potential foreign direct investors off, which means you have to work even harder on ensuring that the business environment here is so good that investors come anyway, despite the security situation. So I guess the message is there is no reason, there's no excuse not to push forward reform. You have to focus on improving competitiveness, making sure the business environment is as good as it possibly could be to compete with other economies in the region and also economies globally.
You have been watching Ukraine Today, where we have been joined by the Managing Director of Nomura, Mr. Timothy Ash. Thank you very much for watching.